Welcome back to Ask Dad, where we talk about all sorts of topics of any kind that you may ask your dad. And in today's video, we're going to talk about how I went to buy Chipotle stock and ended up buying Jack in the Box. So, first, a quick disclaimer, this is not financial advice. This is simply how I picked a certain stock and what I did to screen it from a high level. We're not going to get into the financials too much or any of those details, but I do want to show you the high level details of how I ended up going from what I think is one of the best restaurants in the industry to a lesser known company simply based on where I think the stock will probably go. So turning on my screen, Chipotle Mexican Grill. One of the things that turned me on to Chipotle was I was listening to Jim Cramer of all people, and he mentioned that Chipotle had announced a 50-for-1 stock split. What that means is everyone that has one share of Chipotle will end up with 50 shares when they're done. And this is happening in June sometime. So a stock split a lot of times will indicate that the stock should go up based on a number of factors, not at all related to earnings necessarily, but due to the availability of stock at lower prices. And so Chipotle is currently trading at $3,178.16 a share, and this is as of the 17th of May, 2024. So when I came in to look at Chipotle, I started screening the stock, I looked at the financials, everything looked decent. And then I started comparing it to the market sector. And one of the things that really started catching my eye was where Chipotle sits in market capitalization compared to its peers. And I won't go too much into that, but here's what I see. So we've got a high share price. I want to come down. I look at the earnings per share. I look at the PE ratio, which is the price to earnings ratio. Divide the price by the earnings, and you get the PE ratio. And there's other factors like the revenue per employee, et cetera, et cetera. So I went to the gold standard of the industry, and by gold standard I mean the largest, and I looked at McDonald's. So McDonald's has a $271 share price. It has a PE ratio of 23. Remember, Chipotle was 60 something. And that's okay because it means that the company still is more aggressively growing. The market capitalization is something that started tripping me up a little bit. The market capitalization of McDonald's is 197 billion. Well, Chipotle was 86 billion. So a little less than half of McDonald's. However, McDonald's has a huge number of stores. It's got 41,822 stores. Chipotle only has 3,400. So that got me looking into, well, what does that look like with other stores? And let me just bring over a quick graph that I built, blow this up a little bit to make it easier to see. And if we look, McDonald's has 895.66 billion market capitalization, and that's all the shares. If all the shares are put together with the market, what that would make the company worth. PE ratio of 23, and number of stores 41,000. Okay, well, Burger King is owned by another company that owns Tim Hortons and Popeyes, so we have to take all their numbers together. They've got a market capitalization of $70 billion, a PE ratio of 18.34, and they've got 19,000 stores. Now, if you look at the difference in companies, people think that McDonald's is going to be more valuable long term, so that's why you have a difference in the PE ratio of 23 to 18. But let's keep going. So Wendy's has a market cap of $3 billion, significantly different than the $70 billion of Burger King, Tim Hortons, and Popeyes. They have 6,500 stores and an 18 PE ratio. Skipping Chipotle, Jack in the Box has a $1 billion market cap, a 9.57% PE ratio, and they have 2,100 stores. Del Taco, 0.45 billion, 23 PE ratio, and 598 stores. So here's what got me thinking. If Chipotle only has 3,400 stores, and they're worth more than Burger King, Tim Hortons, Popeyes, Wendy's, Jack in the Box, and Del Taco combined, yes, I think they're a better restaurant than all of those. I like their food better, but will they ever be able to actually exceed that value? And what I mean by that is they've got 3,400 stores, an $87 billion market capitalization, yet they're worth more than all of these other restaurants combined. A 67 PE ratio means that there is already a lot of growth baked into that. Wall Street is already planning that will make more money over time. And it has to catch up before it will, because again, your peers generally determine where an average PE ratio will be. So Wall Street's already assuming that Chipotle is going to grow, and it's built into the share price. And I'm not sure it will grow much more in share price, not restaurants, but in share price, than it's already valued at. So that led me to look at all the others. And as I was going through the financials, Jack in the Box has aggressively been cutting costs. They've been around for a while. They've gone through some serious up and downs. They have a pretty loyal base of people who like to eat there. And at their current PE ratio, they're at least a stable company. Now, they also have a dividend of about 3%, which makes it a little bit easier to carry, and that helps offset some cost and gives you a return there. But Jack in the Box seems to be planning for long-term business stability. Whether they will grow aggressively or not, I don't know, but they're positioning themselves to be able to do so. So, based on these factors, I went in, took a look at Jack in the Box, looked at the financials, and I'm using a site called marketwatch.com for anyone who's interested. You can come in and actually take a look at the financials. And what I saw in here, I actually liked. It looked like they'd been planning. They've got a long-term trend of revenue growth. They've had some interesting, unusual expenses. But from everything that I'm seeing in here, on both an annual and a quarterly basis, it looks like Jack in the Box is taking the right steps. And it looks like they're headed the right direction. And when you look at their balance sheet, I got the same thing. Now again, not financial advice. This is simply what I looked at. But as I went through, I found that Jack in the Box seemed to be a better value. Not necessarily a better restaurant. I like some of their food, but they cater to a different market. But long-term value for a stock, I ended up with Jack in the Box. So I hope you found this video valuable and helpful. If it was something that gives you any value, please do like. If this type of content is something that you find helpful, consider subscribing to the channel. And if you know someone who may be interested in this content, please do share. Thanks for being here. We'll see you in the next video.